season, which we are currently in. And this is the opportunity for homeowners to understand what their property taxes are based on, how they're calculated, how to dispute if they feel like there's an inaccuracy. And then we'll move on to some of the savings programs like the property tax exemptions. So I hope everyone can see my screen. Right now I am showing the New York City Department of Finance website. Very good. Well, we're really proud of our website. It provides some great resources, and nearly everything that you need to know about the taxes and the savings programs can be found on the New York City Department of Finance website. It's very easy to find our website just by Googling NYC DOF or NYC Department of Finance. Before we go on to the Notice of Property Value page, I just want to highlight a couple of tools on the website, like our translation option. You can translate any of this language into your language of choice, so that's helpful for other folks. And you can increase the text size of the language for people like me that need their glasses more often, right? The nice thing about the finance website too is that it has this search bar. So anything you need to know, whether it's about the rent freeze program, the senior homeowner exemptions, you just type it into the search bar and that will take you to the appropriate page. Before we do that, I want to just let everyone know that they can contact the Department of Finance directly online through the Contact Us section or by calling 311 to be transferred to the Department of Finance call center. If there are any changes in services as a result of the pandemic and COVID, that would be noted here in the purple banner. So what is the Notice of Property Value? Well, this is a document that was sent out to 1.2 million owners just a couple of weeks ago. Every year, the Notice of Property Value document is sent out in the middle of January. It tells people what their property is valued at according to the Department of Finance and what the taxes will be in the next tax year, which starts on July 1st and ends on June 30th. Our property tax year aligns with the city's fiscal budget. So we're about to enter into the 2021/2022 tax year. These notices are available also in multiple languages. So please feel free to access this information after the presentation. The Notice of Property Value page has a lot of really great information, and all of the forms that you need can be located here as well. I also just want to show you that the Department of Finance outreach team is hosting Notice of Property Value outreach sessions, and that's a little bit more in-depth information on how properties are assessed and taxed. I feel like the best way to understand the NOPV is to look over one specifically. Look over a real Notice of Property Value document, explain what it is that owners should be paying attention to when they do review this, and what they should take action on. So you saw that from the NOPV page. I just clicked on Access Your Notice of Property Value. And that opens up the portal for the Department of Finance's Property Tax Public Access Portal. All property tax accounts are public information, yours, your neighbors, the mayor's, everybody's. So you can look it up according to your property address or what's called the Borough Block Lot, the BBL. So I have a BBL here from a homeowner I assisted recently that agreed that he had no problem with using his property as an example in our presentation. This is Mr. Seymour Schwartz. So on the property page here, you notice that we have the address, the Borough Block Lot, the property owner's information, some data about the property, and then on the left-hand side of the page is the account history and the Notice of Property Value documents. This is where you can go to look at your tax bill, and you can see years worth of the tax bills here, and at least the past 10 years worth of the Notice of Property Value documents. So this gentleman received this January 15th. This is a real NOPV document, not a sample. This is his actual document. And it's letting you know at the top his mailing address, the property's address, And then the important information is included in this at a glance box. It describes the property's market value, the assessed value, what property tax exemptions he has. This is a great example in my opinion, because you see he has 3 different savings assigned to his property. He's getting the veterans exemption, senior citizen exemption, and enhanced star, what we like to call the trifecta. So he's saving more than 50% off of his property taxes because he signed up for those exemptions. I'm going to expand this a little bit so we can read the fine print here, because what's important is located on the right side, the key dates. If you choose to request a review for your market value, which I'll describe how that can be done, it must be done by March 15th. This is true also if you want to challenge the assessed value of the property. For a class 1 property, meaning it's a smaller property with less than 4 units, the deadline is March 15th. This is true also for the property tax exemption applications, which you'll hear more about towards the end here. Everyone must apply by March 15th. Then it tells you again about how the tax year starts in the summer and ends in the next year, aligns with the fiscal year. It's reminding owners that the tax rate is determined annually in November, and that's through the city council and the mayor's office. This is something important for owners to know, because they will see that in the middle of the property tax year, their taxes could slightly adjust as the adopted tax rate changes. It was lowered last year for tax 1 and tax 2 or class 2 properties. And then at the bottom of the first page, it shows you what the estimated property tax bill would be for this owner. The calculation is indicating that after they determined the market value and the assessed value, subtracted the exemptions that he was approved for, multiplied the taxable value by the adopted tax rate. So this gentleman's annual tax bill is $2,500. Originally, his tax bill was almost $7,000 before the exemptions. So another reason I use this example, because those exemptions were over $4,000 worth of savings. So very important that everyone's getting what they're eligible for. On the second page, it gives you a lot more information on how the different calculations are conducted. And the first is again coming back to, how is a property taxed? What happens is the Department of Finance uses statistical analysis of comparable sales in the neighborhood over the past 1 to 3 years to assign a market value to your property. It's based on comps, what's been selling recently. And then there's a percentage applied to determine the assessed value. So for a class 1 property, they would be assessed at 6% of their market value. For a class 2 property, which is 4+ units, co-ops, and condos, they are assessed at 45% of the market value, but they have different adopted tax rates. There's an effective market value listed, which is really important for owners that believe that they should dispute the value assigned. The effective market value is indicating that for this particular property, they are being assessed at less than 6%, as we mentioned before, because they've reached the cap on the increases that are allowed by the state. The state has put a law in place that will not allow the city to raise a property's value more than 20% over a 5-year period of time. That's to protect owners that see sharp increases in their market values from experiencing sharp increases in the property taxes as well. So if your market value has gone up more in the past, you'll see that you're assessed at less than 6%. This is important because if an owner wants to dispute the value assigned to their property, in order to win that dispute, they would have to show that the comps do not match the effective market value. So that basically means an owner would have to say, is my property in this example worth around the range of $586,000? We know the market value is $700,000, but they are being taxed on their effective market value and would have to provide examples of comps, comparable properties in the neighborhood with a much lower value assigned as evidence that there's an inaccuracy in their value. That's something to keep in mind as we talk about requesting a review or disputing with the tax commission. And then we subtract the exemptions that the owner is receiving, resulting in the taxable value. We have any questions before I continue on here? Okay, great. Now there is a note on this year's notice of property value document about how COVID may impact the property taxes. Something that we have to keep in mind in Brooklyn, which is my home borough too, is that class 1 properties, which again, that's less than 4 units, they saw an increase in their market value over the past year, as there were more people moving out of their condos and co-ops into townhomes and larger properties, especially in the outer boroughs. Some folks in Brooklyn, myself included, are surprised that there were increases in the market value for class 1 property. So that's something that I've heard a lot of owners that once they got their NOPV, they didn't expect to see that. It wasn't a huge increase, but it did actually, the market was strong for Brooklyn last year. What to do if you disagree with these values? The first is that you must request a review with the Department of Finance. That's a chance for the Department of Finance to perform another evaluation of the property and determine if the market value is accurate. In order for a review to occur, the owner must request it by submitting the RFR request for review form, which is back on our NOPV page. I'll show you that. They can actually call 311 and request to have one mailed to them if they don't have access to a computer. Or the best and the fastest option is to submit that request online through our online application. Those are processed a little bit faster than the paper applications. It does remind owners again that your property tax will not go down unless you can prove that the market value should be lower than the effective market value. And this is determined based on New York State real property tax law. Simultaneously, the deadline's March 15th, simultaneously, I always advise owners to also challenge their assessed value with the New York City Tax Commission. The Tax Commission is an independent agency that has the authority to override Department of Finance determinations. I say to do so simultaneously because the deadlines are coming up, and I wouldn't want an owner to miss out on an option because they're waiting for a response on the other form here. And the forms do take at least a few weeks, if not up to 30 days to process. The Tax Commission has the authority to reduce the property's assessed value. And this again would be based on providing comparable sales in the neighborhood that show, or comparable properties that show that the value was lower. Their website has their contact information and all of the forms that are needed too. So that's one primary way to get a reduction on your property taxes. To identify that the value is assigned in error or there's a discrepancy, and to submit a request or a challenge to get that corrected. A second way that owners can see a reduction in their taxes is to identify an error in the property's description. What's funny is when I look at this with homeowners, they say they never really pay attention to this part. But if you don't scrutinize it and something is inaccurate, it might be causing an owner to overpay on their taxes. And if they recognize an error, if we can go back up to at least 6 years to get that corrected and potentially get a retroactive credit for that owner. One example where that did occur was I had an owner where the square footage was listed at twice of what it was in reality. And they never really took a look at this, so they didn't realize that was the case until we sat down and checked it out together. We submitted the request to update form, which is required for an update to the property details to occur. And then that allowed the agency to review the property and see that the square footage was much lower. So this is true for any of the details that are listed here, the number of units, the commercial units, if there's a garage, anything that's not accurate here should be updated. Which if it was the scenario which I described, where it was a major discrepancy in the square footage, that caused a significant reduction in the property taxes for the owner. So we were pleased when we finally recognized that. That form is available again on our website or by calling 311. And this table here shows what's occurred from the past year to the next year. So we are currently in the 2020/2021 property tax year. The chart, the table, shows what we've just described with the different sections on how the taxes are calculated. And this is showing what's going to change from the last year to the next year. So this gentleman that lives in Queens, he had a small increase in his market value, led to a small increase in the assessed value, and actually a small increase in the taxable value. We're coming towards the end of the NOPV. This section reminds owners that the third way to save on your property taxes is to qualify for an exemption or an abatement, a co-op condo tax abatement. There'll be more details coming up. And then also how to get help from the Department of Finance. You can submit an inquiry on our website. You can contact us by calling 311, sending a letter to the correspondence unit. And we encourage everyone to attend a virtual outreach event. If you click on this page, it'll take you back to our website where you can register for those events. If at any point a homeowner or any customer from the Department of Finance is not able to find a satisfactory resolution to their issues through the normal processes that we just described, they do have a right to contact the Office of the Taxpayer Advocate. The Taxpayer Advocate's office has a team of specialists dedicated to solving systemic issues and helping with more in-depth cases and inquiries. They can be reached by 311 again. They'll send a service request to their office or by sending mail to them directly at their office in New York City. I just want to remind all of our attendees and anyone that works with the Department of Finance that if there is a disability or a health condition that requires an accommodation, the Department of Finance will provide that through our Disability Services Facilitator. And that request can be made, I think I said this 5 times, by calling 311. Before I close out my section of the presentation here, I just want to highlight quickly, where can you see the exemptions on the property tax bill? I often have owners that will come to me and they'll say, I'm not certain which exemptions I'm getting. And I'll take a look at their tax bill and help them to understand so that we know they're not missing out on anything. So this is a quarterly tax statement for the same homeowners who notice a property value document we just reviewed. It shows he has a nice low quarterly charge of $584, which remember is about 60% off of his original charge. So much lower because of the exemptions. And the exemptions are located on the second page here in the part on how we calculate your property tax. It shows the market value assigned, the adopted tax rate, the assessed value, and then here's where the reductions are applied. The gentleman's getting 2 levels of the veterans exemption, basic and disabled, getting the senior homeowner exemption at 50% off, and also enhanced star, which is saving him another $659 a year. So like I said, originally nearly $7,000 a year was his tax bill. Now it's just under $2,400. So such a great savings. And final portion, as a reminder, all of the forms that you need in order to either dispute the assessed value or to dispute the the market value are located right here in the request to review form section in the challenge your assessment section. Okay, well, that's what I have for how your property taxes are calculated. I know we're going into more specific information on the exemption program, so I'll stick around and answer any questions in regards to that.
Thank you so much, Jennifer. So we're gonna leave the questions for the very end, just in case they have like collected questions. But I just remind you guys, so you can put it in the chat. That way we'll have like a record. But at the very end, when we're addressing it, if you feel more comfortable saying it, you will have the mic and you can ask any of us. But you know, luckily we have Jennifer and she knows how to handle all of it. So I will now follow up with all the property tax exemptions. So like Jennifer was saying, they are reduced by The homeowners can pay less in their can pay less in general. Like generally they pay in the mortgage all the property taxes all together. So most of the time the homeowners don't really know how much you're paying exactly. But if you see like the form that Jennifer was talking about, you will see a breakdown of all the property taxes you're paying. And generally they can save up money by reducing the assets value of the property. So then now I'm going to give you a little breakdown of all the property tax exemptions that you could qualify for. That way you could be saving a lot of money. And just a quick reminder at the bottom of the page, like Jennifer was saying, they all should be submitted by March 15. And we'll also give you a little breakdown on how often do you have to fill in these forms, if you have to fill in yours this year, if you've done it before, and something else will be if we could assist you with that. So they're all different ones, and here are the most common ones. Let me move this camera for a moment. So these are the most common property tax exemptions. So the first one will be the senior citizen homeowners exemption. And this one is if you are 65 and above. And I'm going to give you a little bit more of a breakdown in the next page. So that way you can see all the eligibility requirements and all the benefits that you could be getting. And this one has to be renewed every 2 years. So Jennifer actually informed us not too long ago that this one and the disabled homeowners tax exemptions, because of everything that has been happening, you will get automatically renewed this year if you qualified last year. So you wouldn't have to worry about applying again. It will send to all the homeowners that qualified. But if you have any questions on that and you would like us to check, you could also give us a call. We will give you the information after, or you could, check in with Jennifer as well, and she will be able to confirm if your property qualifies for that. So we also have the homeowners exemption, the disabled homeowners exemption. Like I said, renew every 2 years. We have the veterans exemption, and this could be either if you're a veteran or like a spouse or a person, the owner of the property, qualifies for it. Also, it's every 2 years, and in the next chart we will give you another breakdown, because generally there has to be a specific proof that you have to submit for you to show how much of a benefit you can get. The school tax relief STARS exemption, most homeowners qualify for this one. They as long as they're like 12 months living in the property, but you will see another breakdown of this, and just to make sure that you have it. The clergy's exemption, and then the disabled crime victims or Good Samaritan exemption. Those are not as common, especially the disabled crime victim. But again, let me give you guys more information on this. Also, let me know if I'm going too fast. But again, if you have any questions, put them in the chat and we will happily address them at the very end. So here's a little bit more of a breakdown of every single one of the exemptions. Like I said, the first one is STARS, the school tax relief, the basic STAR, and there's also an enhanced STAR. The main difference is that if you are 65 and above, then you could get the enhanced STAR, and that just increases the benefits that you can get. As you can see, this has to be your primary residence, and your annual income cannot go above $250,000, or yeah, it can go above that. Income, yeah. And then the benefit, it could go up to 300 a year. It gives you the information, it gives you the information on when to apply. And as you can see on the bottom of all of these forms, it says March 15. So by March 15, all of your exemptions have to be submitted, or any forms that you would like to dispute, just to make sure that your property gets the benefit. There's also the senior citizens homeowners exemption. If you qualify for this one, you will know to automatically qualify for the enhanced STAR, just so you know. This one is as long as you make less than $58,399 or less. In the next page, I will actually be showing you a little bit of like the estimate of how much you could be saving depending on your income, so you can kind of calculate that. Then there's the disabled homeowners exemption. And as long as, one of the, as long as the owner of the property can prove that, then, you will be qualifying. And then the other three, I'm gonna move on to the next ones just so you can see I'm gonna give you a little bit more of like the eligibility requirements. Well, actually, in the veterans exemption, as you can see in the page, it will say available to certain veteran owners of houses, co-op or condos, their unmarried spouses and gold star parents. So as you can see, it doesn't only have to be the veteran themselves. As long as it was a spouse or like a close relative, you could see, but there will be more specifics later on. And again, every single one of them, you can, set an appointment with us, or you can talk directly with Jennifer, and we will be able to assess your situation. And that way we will know which exemption will qualify for you best. And just so you know, you could qualify for more than one exemption and you could combine them. That way you could save as much as benefits as your property can get. The estimated reduction. So this one was mainly, if you can go in the Department of Finance page, you will find it under the senior homeowner tax exemption and the disabled homeowner tax exemption. And you could see, depending on the income or the amount of income that you will be submitting, you could see about how much of a percentage you will be saving on your property taxes. And then eventually this will be showing on your mortgage if you continue to pay it. Actually, I'm gonna go back for one moment and I'm gonna give you guys like a few seconds. If anyone is interested in taking a picture of this chart in case, so you guys would like to have the information with you, let me know. We're doing good in Spanish? Okay. So yeah, it will be great to have a picture of this. This is a really helpful chart. And then, let's see. Okay, something else I wanted to have a quick touch on was the rent increase exemption and the disability increase exemption. These are two other programs or two other benefits that are offered, but these are for tenants and renters. Rosalinda and I from Cyber Seals, we also actually work directly with tenants, but senior tenants. So if you are renting and you would like your rent to be frozen in like at the moment, and if your the property where you're living right now qualifies for it, which we could check we could assess your personal situation. We would just have to meet with you and see if your property qualifies for this. It could be very beneficial. This will save you a lot of money in rent, and you wouldn't have to worry about increasing it later. And this you will qualify for if you're a senior or if you have proof of disability. Again, the property will have to qualify as well, but we could check that for you. And this is a really, really helpful exemption program, but as well for tenants or renters. Okay, so now let me break down how we generally assess what exemption you qualify for. Like I said in the top, every single one depends on each exemption you're qualifying for. So generally, you have to have a proof of income. As you can see in every single one of the exemptions, it will say you have to make certain amount or less to make sure, or you can pass that amount to make sure that you qualify for these exemptions. So we will be submitting a proof of income, and this could be, your tax returns, your Social Security benefits, your pension, any rental income you get, any family gifts, that will be all counted for you. So as the owner, then it will be proof of ownership, and then that could generally be determined when you fill in the information in the application. But it could also be like a proof of deed and any other documentation like that. This could be as well for age. So for age, remember it has to be 65 for seniors. So that generally goes, straight to the point, but it will be, proving your ID or birth certificate. That will be generally easier to provide. The residency, and by that we mean we have to make sure it's your primary residence. So you have to be living in the property for you to qualify for these exemptions. This generally cannot be like your rental property or any other properties you have on the side. This has to be the one the owner or the person applying for it's currently living on. The moment, the length of residency. So like we stated before, you have to at least be living in this property for at least 12 months to start qualifying for any of the exemptions. So at least 1 year. So if you just recently bought the property, you might not be able to qualify just yet, but just keep on the lookout for as soon as you get the 12 months apply as soon as possible. For the disabled homeowners tax exemptions, you have to show proof of disability and any other special documentation that will be generally for the veterans. It could be any benefit letter that they got, or the DD-214, which generally has a breakdown of everything that they got while they were serving, either your spouse or if you're a veteran yourself. That way they will be able to determine all the benefits you get as a veteran. And then here's the information for Cypress Hills. So as you know, we're working remotely for the most part still because of the regulations of COVID-19, but we want to make sure you guys get all the services and everything that you guys need. So here in the screen right now, you will be seeing all of the counselors that work in the housing division in Cypress Hills. So we have different counselors. The first two are our tenant organizer or tenant counselor, Christopher Rivera and Juana Iris Rivas. So you can take a picture of this in case you know about anyone who needs assistance. And then it will be Rosalinda and me, the homeowner help desk counselor. Here's our numbers so you can reach out to us. And then Rosalinda, the foreclosure prevention counselor. You can reach out again. You can take a picture of this screen, and then that way you can reach out to us at any moment, or you can give the information to anyone you know will be needing assistance from our housing division. And then finally is our housing counseling division director, which is Renee Lane. And here's the phone number. If you will need to meet with us in person and you just want to know if this is something that will work out for you, here's where our office is located, 3214 Fulton Street, Brooklyn, New York, 11208. However, just a reminder right now, because of regulations, we're only taking people by appointment. So it will be nicer, it will be better if you could just give us a call. That way we can set an appointment. And if you go to the office, you won't waste your time. You will go for your specific appointment with your specific counselor. Because if I give you my example, I'm not there every day in the office. I'm only going in 2 days. The rest is working remotely. So then that way you will know when you can meet me. And then before I go, okay, I'm gonna take in the questions now. So I'm gonna leave in this information in case you need to reach out to any of us. You can take it now. You can write it down. But I'm gonna open for questions right now. So I'm gonna go into the chat. If you have any questions, please keep saying them, sending them. I'm gonna start breaking them down. Oh, awesome, Jennifer, thank you so much.
Yes, we did have a question about finding out the information for another state, which I get often because I think every state and municipality has something similar. So it's typically going to be administered either by the county tax assessor or by the state. And I just Google it. So I've helped some people in Florida to find out where they should apply, and in Wisconsin. And for Illinois, I just Googled it and it took me to the government website with the information. So even if you don't live in New York, there are programs similar to these for homeowners outside of the city. I also added to your presentation. Your presentation was fantastic. There's two things that I think should be highlighted about these savings programs that are different than other public benefits. The first is that there's no citizenship requirement. So we always talk about primary residency. And what we mean there is that you live in that home more than 6 months out of the year. You're claiming that as your home it's not a second home, it's not a vacation home. It's the primary residency where you live. It has nothing to do with your residency or citizenship for the United States. They're never going to ask anything about that. It's not a factor in eligibility. It just has to be the apartment or the home that you live in solely or for the majority of the year. There's no resource or asset test for these programs. So it's not like SNAP and Medicaid, where if you have some savings or if you have, a second automobile, that could cause you to be denied. The Department of Finance would not ask about any sort of assets beyond if you're earning some interest on those accounts. So if you are fortunate enough to have saved up for retirement, that's not going to cause someone to be denied for the homeowners exemptions or the rent freeze program. Another thing with the homeowners exemptions is some people have saved up enough in an individual retirement account, an IRA, that they'll get monthly or annual distributions from that account. that they supplement their retirement income with. IRA distributions are not part of the income test for the homeowners exemptions. So even though some people are over the guideline, because that's not included in the income test, they can still get approved. And another thing for owners to maximize their savings for the senior and disabled exemptions, the property tax exemptions, they can deduct any out-of-pocket medical expenses from the past year. So especially when I see someone's only getting 15% off or 20% off, I'm thinking you're probably paying over $100 every month for your Medicare premiums. Those really add up. You see that at the end of the year on your Social Security 1099, that's enough of a medical expense to increase your savings. And then it could be any out-of-pocket co-payments, your prescription costs, supplemental insurance. If somebody has a lot of medical expenses, they probably are claiming that on their federal tax returns. And a Schedule A could reflect thousands of dollars in medical expenses to help maximize their savings. For the rent freeze program, it's a little different though. The only deductions that can be included in the senior and disabled rent freeze program are any city, state, or federal taxes that those tenants pay. Unfortunately, we can't deduct medical expenses for that program. And then the biggest difference, which causes a lot of confusion, honestly, is, and this is because of state law, a senior for the homeowners program has to be 65 or over. If you apply right now, you must be 65 by December 31st of this year. So you really could be 64 in applying, and that's true for all of the owners, except for in cases of spouses or siblings. But for the rent freeze program, the senior is defined as 62 and over. Don't ask me why, but that's one of the major differences. Those are the most common questions that I encounter.
Thank you. Thank you so much, Jennifer. Yeah, and then actually you had just recently told me that was I'm gonna point it out right now. There's different ways we can apply for these exemptions. And now you can actually apply through it online. Before we used to just generally fill in the form, print like a physical copy, and then send it. If you don't feel comfortable with that, and or like let's say you're not comfortable meeting in person, we can always have a different type of meeting, either a conference call or just a regular phone call, and then we can assist you filling that information as long as you are able to submit the documentation. And this is now, you said, when did it start with the rent increase?
As of last week, now you can submit an initial application on the Department of Finance website for the rent freeze program. Soon, I think in maybe 2 months or 3 months, you'll be able to submit your renewal applications for the rent freeze program there. And then for the homeowners exemptions, you can apply for all of those online. One thing I've noticed for owners about this time of the year, they may not have their tax returns ready, and they're worried about, well, I can't apply until I have the income documents that I need. Well, they shouldn't wait. Well, shouldn't wait until they get the taxes done, because we know the exemptions deadline is March 15th. If an application is submitted without all of the documents, that's okay. It just means that we'll send a letter or an email to that owner letting them know they'll still have to submit those items as soon as they're available. Or they could even use the year before. So right now we will accept 2019 tax returns for the homeowners exemptions.
Great, great, awesome. Does anybody else have any questions? Anything in Spanish? No? Good, thank you. Okay, so in the screen right now, I just have the events that you were talking about. I know you and Eric send it to me. So, and these are like really important. And I know they often giving information for the homeowners. Generally, our division is going to these events often just so we can also just gather as much as information and all the updates that are there given. So here are the dates. Obviously we can click on these links right now, but if you would like me to send that with the recording or the slides of the presentation, please let us know. And so you will have the information for you to join all of the Department of Finance events. And then we also had this, it was just a little breakdown.
That's good. Some
information for the homeowners in case you want to take a picture. These also has some information of the exemptions on the side. And let me see this one. Oh, you wanna? Oh, I can say it. Okay, I can say it in Spanish. So sí puede aplicar, no importa el tamaño de la vivienda, solamente tenemos que ver si su ingreso cualifica. Porque como son casos diferentes y a ver a qué tipo de exempción usted cualifica. So, sí puede aplicar. Solo tenemos que hacer una cita, so puede hacer una cita conmigo. Oh, okay, yeah, awesome. So, she was asking if we could apply even though if it's a one family house. So, yeah, I was just figuring it out.
So for the homeowners exemptions, it doesn't matter if it's a co-op, a condo, a one-family home. Let's say, for example, you own a building that's 3 units and you use 2 of them as your primary residence. Whatever portion of the property you use that you live in, you can receive the discount on. Now, for the rent freeze program, it's a little different because they must live in the rent regulated apartment. So it has to be rent stabilized or rent controlled, Mitchell-Lama apartments, SROs. They have to live in the approved housing category in order for the city to freeze the rent for that tenant.
Awesome, awesome. ¿Alguna otra pregunta? Any other questions? That's okay. Either one who's working will just have to make sure that the income doesn't go over the limit and you will still qualify for any exemption. We will also have to check. I have to, Jennifer, you can, check me if I'm right or wrong. So for the exemptions, we just have to make sure that the property owner is the one that is qualifying for it. So if there's more than one property owner, let's say it's okay, let's say you're applying for the senior homeowner tax exemption. It can be the mother that's a senior and the son that's also in the exemption, because that will disqualify them, right?
That's right. For the homeowners exemptions, the rules for Shahi and Dahi apply to all of the owners of the property. So that means that they all must be either seniors or disabled, and their total combined income of all owners and the spouses will be included in the income test. The exceptions to that rule is if their spouses or siblings, the owners, only one of them has to meet the age criteria or the disability criteria, but they will still include the income of all of those owners. Or if there's trust or life estates, which are different forms of documents for ownership, then it would be dependent on who the trustees are and who the life estate holder is. But yes, it does apply generally to all of the owners of the property listed on the deed and their spouses. For star and enhanced star, only one of the owners needs to live on the property though.
Okay. And then this will be generally proof how, like, so the name that's on the deed.
That's right. And honestly, some people forget who's listed on their deed.
Right.
The deeds are public information as well and can be found on Acurus, the automated registry system, which is on the Department of Finance website, or you can find online too. Just in case you need to double check, did I still have my aunt listed as an owner, and do they be included?
Okay, yeah, so we would meet then just in case to see which ones you qualify for. She's saying she's 45, her and husband are 45 and they're also not disabled. But we could still check if there's anything else that they are missing they could be qualifying for.
Well, that does lead me to introduce more about the New York State Department of Taxation and Finance when it comes to STAR and Enhanced STAR. So all of the exemptions that you described, you're just going to apply for those with New York City Department of Finance, except for STAR, Basic STAR, or Enhanced STAR. After 2016, the law changed where now the State Department of Taxation and Finance is administering that program. So honestly, for most New Yorkers that are younger, don't have disability, they'll only qualify for Basic STAR, $300 savings. And if you don't already have that on your property tax bill as an exemption, then you must apply with New York State. I put their link in the chat box here. You can apply either online or over the phone with the state. If you're eligible for Enhanced STAR, when you sign up with the state, they'll automatically enroll you into that program. You can't receive both of them simultaneously, STAR and Enhanced STAR, only one or the other. if you have basic star on your tax bill already as an exemption, then prior to 2016, that means that you're grandfathered in with the city. And then there's a one-page application on the website to upgrade to enhanced star. So for seniors turning 65, income under 90,000, because that's the guideline for E-Star, they should have both enhanced star and the senior exemption.
Got it. And then one more question, just so if you can give me like a quick breakdown, because I know this is something that a lot of our homeowners are taking advantage of, is the deed theft protection form.
Oh, yes. Well, fortunately, the Department of Finance started a new program called the automated notification. Anytime anything is recorded on somebody's property through the land record system, which has what everything is maintained for in New York, then the original owner receives a letter in the mail letting you know something's been recorded. And that's in order to prevent deed theft or deed fraud, which has been on the rise, especially in Brooklyn and especially for older adults. So that lets the owner know that immediately there's a red flag and they should look into this. I'm going to share in the chat box the portion of our website that describes how to identify deed fraud, protect yourself from it, and to call the sheriff's office if there's anything suspicious that happens.
And then there's one more question for you.
I see that there's a question here about what happens when an owner passes away. Well, for the senior exemption, besides the auto renewal for this year due to the pandemic, typically they must renew every other year, or for the disabled exemption, the renewal is required annually. So at that point, if it's identified the property is no longer eligible because the original applicant no longer lives there, is not an owner, has passed away, then the renewal application, if it was submitted by another owner, would most likely be denied. Generally, when there's a change in ownership of any sort, whether it's adding somebody to the deed, putting the property in a trust, or adding another, removing an owner from the deed, that will cause the exemptions to be removed from the property, and the new composition of owners must apply. Sometimes the city gets information from the IRS and the Social Security Administration. I shouldn't say sometimes, it's annually actually, that lets us know about owners that we've lost here in the city. And then we will audit those properties and send them a letter saying, is there a remaining owner still eligible to retain these exemptions? So if you get anything like that from the Department of Finance, it's important to respond right away and let us know. We don't want to remove the exemptions. If the deadline has passed, still reach out, because most of the time we can get it worked out and make sure the exemptions are put back on the property as long as the owners are still eligible. But they are assigned to the applicant. So if the applicant's no longer eligible, then they'll have to apply again or go without the exemption.
Right. Especially because sometimes, unfortunately, the owners pass away, but nobody immediately claims the property. So it just kind of stays in the limbo until later on. Which reminds me now, I have we get a lot of homeowners with these questions because so they apply right now and they expect the exemption to hit like the next month.
Right.
So then I will just remind you guys. So when you apply right now, we just want to make sure that you guys apply before March 15. That way, if there's anything that you have to address in the application, like Jennifer said, sometimes there's some documentation missing or something doesn't add up. So you have enough time. But the exemption, like the exemption won't kick into your your property taxes until July 1st, right? So until that same year that is due. So then in March 1st, you will start noticing all the property taxes changing, reducing, and that way you can immediately check in on your mortgage payments if you're paying it all together. And that's, I think that's pretty much it. Is there any more questions? Oh, wait. Sorry, Renee, I think you were listening. Were you clarifying or were you asking me? Sorry, I saw it in the message. I don't know if he was. Renee? I don't know. Okay, he sent the message, but I'm just gonna translate it. He said, I don't know if he was answering to the one before, the one that you were also answering, and it's you could still qualify for the exemptions, either if you're in a one family house. It just depends on your income, the income of the family, your age. Yeah, and that's among some of the requirements. Yeah, again, I'm gonna bring it to that page just in case. But generally, when we're applying or when we're meeting, oh yeah, meeting with my participants, these are most of the proofs that are required. So that way I can see what exemptions you will qualify for.
I see Rosalinda is asking,
Yeah.
I'm a little bit uncertain about the question here. What if the deed holder passes away, but still shows on the deed? So I think that means that the property is not transferred to a new owner yet. It hasn't gone through probate perhaps. So I'm not sure like what scenario they're asking they should expect, but like I said, what'll happen from the Department of Finance's perspective is until we get a new deed filed for that property, we would still have those owners on record. And then when the renewal occurs, that's when they would end up identifying that the property is no longer eligible for those exemptions, or when the annual data match occurs, when we match up with the Social Security Administration on the New Yorkers that we've lost, then the exemptions would be removed. Now I say generally because that is dependent on computer systems doing data matches. And if the property doesn't come into that data match, I just want to warn owners that the city does have a right to go back and charge for up to 6 years if an exemption was issued, but the property was not eligible. So it's best for the owners that will be taking over the property to notify the Department of Finance as soon as they recognize that the property is no longer eligible. So there's no chance of a back charge in the future when that's identified. I hope that answered the question.
Yes, Jennifer. They were just saying that they didn't know if the deed needed to be changed or can it be left like that. So I think you answered it by, indicating you leave it like that, down the road, you would still be charged that benefit that was actually given or awarded to the actual, the deed holder. So it's easier and faster and, beneficial for the deed to be changed once someone's not in the property anymore or not in the interest of the property or passes away.
Mm-hmm. And that's especially true when there's other things to handle with the property. Like for example, paying the taxes. Anyone can pay the property taxes, but if an owner gets behind on their taxes, only a legal owner can sign up for a payment agreement or a property tax and interest deferral agreement. So I've seen in situations where the property is kind of in limbo before it goes through probate. There's family members that are still handling the liabilities, but they don't have as many rights to resolve some of those things. So it is good that they do what they can in order to work out the ownership as quickly as possible. Rosalinda, I can't hear what you're saying.
Oh, I'm sorry, I'm translating, sorry.
Okay, so I think Mitch raised their hand. Would you like me to unmute you? Well, actually, no, they're unmuted themselves. If you have a question, you can go ahead.
Yeah, so I was asking because so the property's in my dad's and mom's name, and my dad passed away, and my mom had went to go ask if she needed to like change anything because it keeps coming out on both of their names. Mm-hmm. And they told her that she doesn't have to do anything, but she wants to see if she can apply to any like programs to like reduce the tax or anything. She doesn't have anything right now. So I was just wondering, like, does she need to change the deed just to her name, or is it fine leaving it like that with both of their names on it?
It's absolutely fine to leave the other owner's name on the deed. In that case, what will happen is the Department of Finance will request a copy of the death certificate in order to show for the records that there's only one owner remaining. And then obviously that other owner wouldn't be part of the application or the eligibility test. So they should send in the copy of the death certificate. Now, if they did want to change the deed for ownership issues, we would typically recommend that they consult with a professional in order to do that. And it's not required for the topics that we're describing today. But on another hand, I do have owners sometimes that would rather not have the second owner's information on their property tax account. Honestly, the last case, it was just a reminder of someone that they lost. So it was hard for them to see that whenever they opened those account statements. And I've just put into the chat box here, if you wanted to change either the mailing address of your property tax bills or to remove one of the owners from the account, it would not remove them from the deed, only from the Department of Finance account records. Then you can submit the update property and billing information form.
Thank you.
Anything else? Anyone else have any questions? Okay, so just remember that the presentation will be available. In case you're interested, you can let us know. Again here, or phone numbers. And then we could also send all the information that Jennifer and all the sites that Jennifer shared with us. Let us know. And I think that will be it. Thank you so much, Jennifer. That was so much information. That was great.
Thank you. Thank you to everything that you do to help out your constituents. It makes a big difference to have a community-based organization with professionals like you and Rosalinda that know exactly how to get through all this paperwork and the processes, and anything else the Department of Finance can do to support that. We are happy to be partnered with you, and we appreciate your work.
Thank you. And again, thank you, Rosalinda, for helping us with the translation. Thank you so much to everyone that was coming. And give me 1 second. I'm gonna actually give you some information. Besides the numbers, remember that the Department of Finance will be having these events. So please join us. And we will actually be having another workshop. This workshop will probably be on March 17th, also around the same time, but this one will be about home repairs. So if you don't know about seeing any homeowners that need home repairs or looking for any home modifications, please let them know. We will be sharing that information soon in all of our Cypress Hills social platforms. And then that will be it for today.
Yes. Thank you, everyone. Thank you, Jennifer. Thank you, Nicole. Nicole, can you just go back to the first slide? We have a hotline number. I know Nicole mentioned it. Yes. So any other services you guys might need, give us a call and we can help you or guide you to the right way. Thank you. Yeah. Enjoy your night.
Thank you, everybody.
Thank you so much for coming.
Sure, I enjoy it.